All right, good afternoon, everybody. Event Trader here. Scott was just talking. We just went through the markets. So, what we are going to be doing right now is going through and taking a look at some of the recent earnings. We did the first half of January up until January 15th with some of the major names that were coming out. And what we're trying to do here is just kind of go through some of the reports that have been out and looking for price action and patterns that have formed around some of these names and some of the key industries and look for opportunities from that. So without further ado, I'm going to introduce Scott Smith back to the segment. Scott, how are you doing today?
Doing well, Gav. You?
Doing okay, doing okay. Um,
Feels like Groundhog's Day, like we're repeating this all over again.
yeah, it really does. And funnily enough, I was actually watching Groundhog Day
Oh, were you really?
yesterday. Yeah, I'm assuming it was by design, but AMC just had it playing on repeat over and
Of
over
course.
throughout the course of the day, which
Of
makes
course.
sense. It is Groundhog's Day. It is a great movie. So
Yep. Actually, did the actual groundhog see the shadow
I
yesterday?
believe he did not,
Oh,
was from
so in,
my understanding.
so in early spring,
I, I
right?
mean, I guess. I'd love to see the accuracy. I mean, I'm sure he's probably as accurate as any of the weathermen that I follow or whatever. But,
Yeah.
I don't, I can't imagine how. This, I'm not.
Oh.
Let's just put it this way: I'm not getting excited if he sees or doesn't see a shadow, with the idea that's what we're looking at.
Yeah, I know. We're forecasting negative temperatures here in the Midwest and over the next week and a half. So I don't know.
Yeah,
Think how well that's going to hold up the groundhog thing, but we'll see.
yeah. I'd rather not have that than care about what the groundhog did. But it is what it is. So
Right.
I've always heard, and when I was at school at the University of Scranton, I always wanted to get over because I hear Puxatawny is actually quite the party
Oh, really?
on those days. Yeah. Yeah.
One time a year. Yeah.
What else? And Puxatawny, I can't imagine that there's too much else to do,
Yeah, yeah,
right?
exactly. Cool.
So.
So where are we going? Where are we going with this?
All right. Yeah, exactly. So, as I was saying, we basically take this time to go through and take a look at um, some of the different names that have come out and how they've reacted. So, where we're at right now is we're up to January 19th. So, if you're looking to follow along with us here, I'll just drop this over the page right now. You can see this is under my ticker, event ticker, and I go through all these names each morning, and that's basically what we're running through. We're up onto the January 19th in the archive. So what you could do is put my ticker in the ticker area, and that'll bring up the archives, and we'll scroll back to the 19th, and you'll see the names that we will be talking about. We are taping this again, and we'll send it out to people as we go along and complete the segments. So just we talked a lot about the financials at the end of the last segment because that Friday on the 15th we had J.P. Morgan, Wells Fargo, and PNC was also another one. But Monday, of course, we were off the 18th for Martin Luther King, and then we came into the 19th, and we had some more financials, which is typical for the first week of earnings season, and that was Bank of America, BAC. I currently am long this in my longer term portfolio. Um, Taking a look at it on a monthly, you can see it's really just kind of been cutting a wide swath between the 24 to 34 area over the last couple of years. I still think that there's upside here. Break above 34 would certainly be notable. But like so many of the financials, as we talked about, saw a little sell the news reaction from Bank of America, and that would roll over from the 33 level there where it was trading at on the 14th, which would have been right before all these financial reports started hitting the wires. It was trading on the day it reported right around 33.60, but would slip down to that 29 area, test the 50, and bounce back, which is really the key theme that we've seen from so many of these financials. So, Scott, what do you think of BAC?
I do like it. Again, I like to look at the bigger picture time frame of everything. The financials really perked up in November from pretty much what was a dormant period throughout most of 2020 where the market was so focused on technology, dealing with the the stay-at-home, work-at-home sort of mentality, and focusing on the recovery effort of all the COVID-related hit stocks and any biotech-related stock and SPACs and everything else was going on. Financials were really kind of left behind in throughout most of 2020 until November. All of a sudden, November came around and boom, they gapped up. XLF, you can look at it on a long-term chart. You can see what I'm talking about. And it started to rise the last 2 months into the end of the year. Started off the year really strong. Like maybe it was anticipation of the future of the earnings reports that were coming out there in mid-January. But they really accelerated to the upside to start the new year. The earnings reports came out. Nothing really happened, within a day or two, and then they started to retreat and pull them back in as the market shifted its focus elsewhere to the technology earnings and stuff like that. So, the good thing is that for anybody that was paying attention to them, I got short JP Morgan after post earnings, caught about 10 points to the downside. I know a couple of subscribers wrote in that they shorted Goldman and Morgan and Citibank, etc. So we all caught the move to the downside there in the latter half of January. However, they have been holding around their 50-day moving averages. The XLF has been holding around the 50-day moving averages. And just here, starting February, we're starting to see some bids come back in context of that multi-month uptrend, in context of a rising 50-day moving average, in context of just a healthy bull market that's out there. So if you're still short with me, you should be highly cautious about that scenario. You should be, hopefully expecting profits on the way down. And if you like the group, I think, they're worthy of taking a look at on the long side. As long as they maintain last week's lows, the Jan lows, and the 50-day moving averages, they still are in context of their uptrend. And I think they could be pushing higher over coming weeks.
Yeah, for shorter-term traders, obviously the FAS is a way that he could play the group with a little bit more volatility if that's what you're looking for.
All right. Speaking of which, Gav, I'm just going to post a quick out here on the remaining balance of JP Morgan.
See, look at that. We're driving investment decisions already.
Oh yeah, well, I mentioned this yesterday. We caught that 10-point gain, and then I had it around 135, and I said if it pushes over 135, I'll salvage the balance for about 3 points. So I'm just going to post that here because it just reminded me to do that.
All right. Also out that morning, we had Goldman Sachs, GS. We had noted going into it that this was likely to be the strongest report. This is based off a commentary that we were seeing at the beginning of December from the Goldman Sachs Financial Conference. A lot of expectations about strong investment banking units. And of course, on the 19th of that month, the Fed came out and said that return policies for banks were going to be based around net income, and Goldman Sachs and Morgan Stanley were expected to have the strongest ones. They did live up to that billing, but similar to the other names here, as you can see on the 19th, this is trading right around 300. It would dip back down to that 270 area, but now it's coming roaring back to 288. Another one that's coming in for another key test of resistance. So looks pretty good here with some upside. So if you're looking for an individual name, I would definitely have Goldman Sachs on my radar there.
Yeah, it's a top one that's definitely been really strong as of late. I have my concerns overall. It seems like Goldman tends to move historically in the final innings of bull markets. That's just my theory. I've been watching the stock for 20 plus years. Maybe it goes up a few more months. Who knows? But when I start to see Goldman leading to the upside, I get a little concerned, a little nervous.
Yeah.
That's it.
Okay. We also had Citrix out that day. Basically, this company reported a nice little 12-cent beat. Revs were above expectations. The guidance was a little light, though, and that was a bit of a concern for some people here. You could see the stock had a immediate dip in reaction, but held the 50-day right around that 127 level, and since then we saw it rally back up to 145. But giving up those gains here, Scott, now would have me a little nervous. I would expect maybe another test to come into that 126, 127 area.
That it would be
CTXS.
CTXS. Okay, sorry, Gav. Yeah, it's not bad. Yeah, it's a little choppy for my taste. You look at this over the last couple months, but recently, it's been trying to maintain strength above the 50-day 130. So, um, I don't really know. I don't really particularly care how it made that move at the end of January and really kind of pull back deeply off that level there. So that's a tough one. I think there's better looking charts out there than this
There
one.
are better
So
looking charts. That would be
yeah,
the
yeah,
bottom line, I would say, for that.
yeah.
All right, we're going to take a look at what happened on that night. And obviously, the big one that garnered all the attention was Netflix. Just posted an incredible quarter. The big thing for me for Netflix was it kind of went from a sub story to a net income story all of a sudden just overnight, and I thought that that was impressive. Rallied right up to that 575 area. I would have thought that it had a little bit more legs
Hmm.
on it than it did, Scott, but we're seeing it get cut down. Came all the way back to 529, nearly giving up all its gains. You can see that gap up there.
Hmm.
Now it's rolled back to 545. What's your thoughts on Netflix here at these levels?
I mean, I was trading it all throughout December and December when it was getting back above the 50-day moving average. Um, and I think I was even involved in it a little bit in early January, ahead of that earnings move. Unfortunately, I don't hold into earnings. I didn't have enough cushion to do so, so I missed out on that breakout to new high territory. But I agree. I mean, after a day or two, and even 3 days, it pulled back in to test the gap. I thought that was going to hold in there around 555, 550 area. But then you just saw the rug get pulled out from underneath it on Jan 27th there, as the rest of the market started to aggressively pull back. So, you look at this chart, you take a step back, you look at it on a longer time frame over the last 7, 8 months. It's still in that choppy sideways range from about 460 to 575, 580ish. So on a weekly time frame, though, sometimes the daily is so choppy sideways. Sometimes you get a better view if you just kind of look at those higher charts, higher time frame charts. I do like the action on a weekly time frame. It does, to me, suggest that if price action could get moving back to the upside again, I think that maybe you can get uh, a nice stronger trend breaking out back over 575, 580 if that develops. I mean, I don't know if that's going to happen, but it's on my radar. It's a leading name. It's got relative strength. I think they just raised their prices, Gav. Did they not increase, or they had some headlines about
Yeah, they,
subscriptions or
they, they
something like
raised the
that?
prices on the 4th.
And I don't know how much they raised it, but
$2.
yeah, and I always just laugh at this company, the people that say it's overvalued, because all you have to do is raise it a dollar or two, and I really don't think a lot of people are going to cancel their subscription based upon paying an extra dollar or two a month.
Yeah,
Call me crazy, but people are
unlikely,
addicted to this stuff.
especially since you can't go out.
Yeah, exactly. It's during a pandemic, and actually some of the series that they've come out with, I've watched the multiple ones over the last couple months. They're actually really good and entertaining, and I just don't think $2 a month is going to break the bank for a lot of people when you can't go out and spend it on actual movie theaters and other stuff in other areas. So, and not to mention the company just made like an extra billion dollars just by raising it $2.
Yeah.
So, I mean, I think it's just got plenty of upside there. Now, the hotter stock on the flip side of that might be Roku. Roku is more of a growth story. Um, and I heard it's actually a really good technology, but I still kind of like Netflix, especially if it starts getting back up near 575, 580.
Yeah, and Fubo too, Fubo in a roundabout way. I'd put that um, on the radar in that realm too, especially
More,
since it's
more of a
getting more
Roku
involved.
or
Well, I mean, just in terms of streaming services,
okay,
they're talking about getting into the gambling side of things too. So, we could see them getting caught up in that as well.
cool.
All right. JBHT was also that day. It's a name that I've been talking up. I'd like the transport space. We did see that early run up, but since earnings have come out, we've seen a lot of these names roll over. JBHT came back down to that 135 area, but it is holding that level now. It's coming back up for a key test of 140,
Yeah,
which is also 50 day.
yeah, I discussed the transports earlier when I was going through the whole sector run, and We love them early on to start the new year. A lot of them looked fantastic, breaking out of multi-month consolidations, breaking out to new highs. And then again, another group that just kind of got the rug pulled out from underneath them into the latter half of January. A lot of false breakouts, a lot of breakdowns through 50-day moving averages, prior weekly, monthly support levels, uptrends. The groups, it's hairy looking. I guess that's the best way I can describe it. It's a mixed bag, whether you're looking at railroads, truckers, airlines. It's just kind of all over the map lately. I don't. Again, I rather go after low hanging fruit technicals than a very sloppy looking chart. So
All right. Next up, we move into Tuesday, the 20th. There, ASML semi equipment play here. Uh, had a pretty good report, beat by 8 cents. Revs beat on that too. They also announced a share buyback program, and their guidance was well above expectations. But the stock did not really react. Again, this was all part of that early kind of sell the news reaction. We did have a pop in this one originally up to 573 there, but again, that would roll back over to test the 20-day moving average right around 520. Since then, bouncing back. It's obviously the key theme that we've been seeing early on these patterns, and now the question will be whether or not they could get back through to the tops. And ASML is a good-looking name here, though.
it is. I believe it's an ADR, so it does have
Yeah.
some very daily gaps associated with it. So that makes it a little bit more difficult to trade, in my opinion. I try to avoid ADRs just for that reason. But technically, I can't deny the strength that's been in play here for semiconductors as a whole, and ASML has definitely been one of the leaders in that group over the course of the last few months to the upside. So really strong name there. Maybe got a little bit too far ahead of itself if you're looking at something like a monthly or a weekly time frame. But I guess that could be said about most of these semiconductor spaces. So maybe they go into a little bit more of a consolidation pattern. You're going to want to pay attention to key support levels starting around 520. It recently looks like a key support level. If it corrects a little further, the 500 mark looks like the rising 50-day moving average will probably come up to meet it around the 500 mark. So I'd keep that on the radar as well.
All right, Morgan Stanley, as the financials continue to flow out. Very similar activity to Goldman Sachs. This has had a
Yes.
little bit less of a bounce off of its 50-day moving average than Goldman, though.
Yeah, it bounced, not seeing much of a follow through above yesterday's highs, but nonetheless, still a group that I think is just going through that sideways sort of action, finding a recent floor after a really strong run up after off those October November lows. So it's a rising above the 50-day moving average. You gotta like it.
All right, then we had one of the best staple plays out there over the last few years, but looking a little tired right now, and that's Procter and Gamble, Scott. At the time, I noted that a failure to hold 133 following a report like this would be a telling sign for the stock, which would likely test the 200-day at 130 in this scenario. Now, they posted pretty good numbers, 13-cent beat. Revenues are up 8.3% to beat expectations. Issued upside guidance and raised up from their prior guidance, and everything was hitting there. They also raised their capital return plans. Yet, look at this chart, just trimming
Mm.
below the 200-day. I'd like to see it get back above the 131 before I get too excited about it. But what are your thoughts here on PG?
Yeah, it's questionable for sure. I mean, if you know anything about technical analysis, this almost has a head and shoulders top pattern that's been carved out over the last 6 or 7 months, and that breakdown below 135 would be your key neckline. Um, I go out to a weekly time frame here, and it's just not looking so pretty. Sometimes you can use when you get a clean technical pattern like this, you can use a measured move off the range or the high of the pattern to where the neckline broke. So if you take 145 down to 135, that's 10 points. A projected target would be 125. So there could still be some weakness, a little bit more weakness in this stock, down to 125 area. That would bring into play the 2019, early 2020 2020 highs. So that kind of makes sense in my mind. If I wanted to be a buyer, I'd be waiting for price action to get down to those levels. But yeah, it's a name here. So if you're looking to add it to your portfolio, you could start nibbling down here, but it's looking vulnerable.
Yeah, I agree. We also had United Health Dow component out that morning. It was a big morning, obviously, for Dow components. This one's been holding up better than some of its peers, but we've definitely, since November 4th, seen some of these insurance companies coming in. Humana, of course, reported earlier. Um, and their chart looked very similar. It's actually a little bit weaker. It is holding in the 330 area at the moment, but would like to see it reestablish above the 50 myself, Scott.
Yeah, it's got that gap from looks like I would say November's earnings where it broke out above 330, and it's been pretty much in that range between 330, 370, 365-ish. It's trading underneath the 50-day moving average lately. It's kind of questionable what the next move is going to be. I'd definitely be concerned if it broke below 330 support that's held up the last 3 months. At the same time, if it does get back below the 50-day moving averages around 344, I think maybe you're going to see the upside of that range tested again.
All right. Moving on to the afternoon of the 20th there, we had United Airlines, UAL. I'm actually liking the look of some of these cruise and airlines now. I'm a little careful, just making sure that I'm not getting caught up in, with the Robin Hood crowd here. Not saying that they're not able to move stocks or pick stocks, but I'm just trying to ascertain if this is just kind of running after low-hanging, low-value fruit, or if this is, the reopening trade trying to reestablish itself. And DFEN is the name that I'm looking at in particular with that, which is more of the aerospace and defense. But UAL, Scott, what do you think of this and some of the airline plays?
Yeah, I'm not a big fan. You look at the Jets ETF. It's just been struggling here the last 2 months, really trying to keep up with the rest of the market. It was even lagging transportation sector that we liked in early January, breaking out to fresh multi-month highs. And so the Jets ETF did pull back here underneath the 50-day moving average. Pretty strong day today. There are a few standouts. So I think it's one of those groups that you have to do a little bit more digging and try to find which ones are acting best, and then maybe take a chance on them. I know you said UAL, you like that one. I'm guessing from a fundamental standpoint, or just because it had earnings. I know you usually like that DAL, Delta, right?
Yeah, no, I don't like UAL. I said
Okay.
DFEN. I'm getting either Dow, LUV, Southwest, or Hawaiian Air. They've got the best balance sheets, so that's where I'd be looking.
Yeah, Hawaiian Air looks really good on the charts there. Has potential to break out for 22 resistance, which goes back for about 9 months or so. Spirit Airlines is breaking out today. In case you didn't see that, SAVE. That's actually clearing, let's go with 9-month highs. Breaking out there over 27 resistance, getting towards $30. So that's looking like the leader, as far as I can tell, in the airline space at this point in time. So
all domestic travel. So
right. So I think HA and Spirit Airlines, Hawaiian Airlines and Spirit Airlines would be the two I'd be focusing on. For me, if I really like the group, I'd probably focus on the Jets ETF, get the diversification by going into the ETF as opposed to putting my money on just one. But I do like your DFEN also, which is more of an aerospace play, which seems to be trying to bounce back a little bit here today.
Yeah, American Airlines was out that morning too. This is another one that I'd be cautious on American given the setup of their of their balance sheet, but it is seeing a little bit of a bounce off the 18 level for American.
Yeah, one concern though, Gav, it would be the rising price in crude oil as well as gasoline prices over the last 2 to 3 months. The UGA is hitting a fresh 9-month high. Crude oil also trading back above, I think it was $54 a barrel, breaking out above Jan consolidation area. So you do have the rising gas, oil prices that I'm sure the airline companies manage that properly.
They've got that all hedged. Although it's probably a little tougher for them to hedge in this environment given the uncertainty. But
right.
All right. We had Discover Financial out that day too. DFS. As you can see, this one had a nice little rally up into the earnings report here, but then just broke down on it. The report wasn't particularly bad at all. The revs were in line. They did beat on the bottom line by 29 cents, but just a failed breakdown now below the 50. Again, another one that needs to establish itself above the 50.
Yeah, credit cards are a tricky area lately. DFS probably one of the strongest performers in the latter half of 2020, and then started to retreat late January and slipping back below the 50-day moving averages. American Express did pretty well. Also, Capital One was up there too. But then you look at Visa and Mastercard, MA and V. Oh man, those are some ugly looking charts. Just sideways, choppy, ranging action for almost months on end. It feels like just seem to have no direction, rhyme, or reason. Gav, I know you mentioned before that a lot of the electronic payment companies, like something like PayPal, with the Venmo and what is it?
Yeah,
Quick Pay and all
the
this other
cashless
stuff.
wallet's definitely getting
That's
bigger.
it.
And I mean,
Yeah.
for me, if I'm sitting there and I get pulled up, would you rather pay with PayPal? I'll do that rather than go looking around for my wallet and type in the 14 digits or whatever that I need to do. So starting to see, I think, a lot more people trend in that direction with overall volume. So.
Yeah, so I mean, not that people aren't using credit cards. I mean, I use credit cards all the time, especially in this environment where you can't go out and you have to do everything almost online. But with fees and regulations in the industry, it's just kind of a weird bunch right now. I would just stick to the leader, like something like PayPal.
Yeah.
What's another cashless wallet out there at play?
Square.
Square. Okay. SQ.
Yeah.
All right. Yeah, it's not bad looking. Yeah, and I know they all have their own little, Chase has Quick Pay or whatever it is. I forget all the names that there's too many for me to keep up with.
Yeah. So next up, KMI, Kinder Morgan. I still own it. That's had a bounce back after some of the post-earnings selling pressure there. Starting to see a little bit of a recovery in the oil names.
Yeah, I mean, my opinion on Kinder Morgan, it's I believe it's an MLP.
Yeah.
So you're basically buying it for the dividend yield, which is, I don't know, where is that, like over 6-7% these days, and it's probably a long-term play for you. I would just say, look to buy it on the dips if you can at the key support levels, etc., because you're probably holding it for the dividend while energy recovers.
All right. So moving along, we are now going into Thursday morning. There's a number of reports out that day. One that I would point out would be UNP, Union Pacific. Again, another one of the transports that broke down following results. The results are good. I think people are just looking for stronger numbers from these names, but the pricing power and the potential for an uptick in the economy in 2021 has to be positive on it. This one, another one that dipped down to support Scott and testing its moving average.
Yeah, sloppy
It
looking.
sounds like a broken record on that.
Now, a lot of these charts, I mean, they do look the same because of the sectors are all kind of trade similarly. And, UNP's in that transport space where it basically had a false breakout in early January. It's back below 50-day moving averages, just very choppy sideways trading. I can't really pinpoint what I would like or dislike about it right now.
Yeah. One of the more interesting names in the markets also reported that morning, Fuel Cell, FCEL. At the time, we talked about how this would be an interesting test for the overall market appetite around earnings and the numbers that we'd be seeing. This was on the 21st. It dipped down to the lows of the year at 1533, and since then just been ripping higher, up about another 45 to 50%.
There's denying the strength in the alternative energy battery space over the last 3 months. Plug, Fuel Cell, Ballard Power, the list, you come up with each one of these. Lithium, ETF, LIT has been doing fantastic. If you're looking for more diversification in the group there, I've highlighted that multiple times. Just the trend's your friend when it comes to these right now. So, yeah.
That evening, we had gotten the latest news from Intel, INTC, of course. It was really strong results out from Intel. It had already been running from the announcement of the EO transition. It popped up to 64 on this, but then it would come crashing back down to the 53 area. Scott, we outlined this entire move with the breakdown below 57 and it tested at 200. Now it's back up to try to test that gap up or that gap up resistance at 57. What do you think of Intel here?
Sloppy. It's definitely tough. I mean, really strong moves as of late. It bounced off 54 support a week ago, and that's pretty much it. It's just got real choppy action right now. Maybe it's turning a corner, but it's been such a laggard for so many years behind the SMH and other leading names that it's tough to get behind this one. You just have to have low expectations, I think, if you are going to participate in this one. But overall, if I had gun to head, it's okay, but 54.
Yeah. All right, another one. Speaking of low expectations, IBM came out. Used to be long this. I threw in the towel a year back because they just kept underperforming, Scott. And again, in their Q4 numbers, they were decent overall. But you just take a look at their cloud revenue growth of 10%, and you compare that to Amazon at 46%, and Google at 50%. Microsoft, I think, was around 50% too. Actually, AWS was 28%, but still, IBM's really trailing them, and it shows in this chart, and it's a chart that I'm not too enthralled with myself.
Yeah, I mean, go span out to a decade-long chart, and this stock peaked around $215 in 2013, and you could still draw that downtrend off multi-year highs. That's still in effect down here, so I have nothing to say. It's been sideways for the last couple of months in a trading range. I don't know, buy low, sell high, but it's don't expect much out of it.
All right. We also had Seagate out that afternoon, and it's making a nice move here, Scott. This is the monthly, and just interesting looking chart from the monthly, interesting looking chart from the weekly, and the trifecta for the daily probably needs to get up above that 70 area for it to be a little sexier on the daily side. But overall, yet another one that saw us sell the news, but this one didn't really sell it for too long, hitting that 60, which was also right around the 50 moving average, then ramping higher.
There are two stocks on our yield focus list, Gavin, for years that we have talked about, and I am kicking myself for never buying them in my long-term account based upon their yield and their buyback yield. First one is Juniper. We talk about it all the time, how we always want to own it on the dips, and it always seems to come roaring back. And the second one is Seagate, STX. I talked about it for just years, and it's actually on the yield focus list again. It just has a strong yield. It has a strong buyback yield. The relative strength has been there. It's just constantly making that list. It looks great right now. Technically, it's trying to emerge into new multi-year high ground. I think it's worthy of taking a closer look at if you have the tolerance above 55. Short term, obviously, you want it to stay above the $50 area, the 50-day moving average area around 62. But overall, I think I'm going to start looking at this one above 55.
All right. Two others that morning. Two rail plays, Kansas City Southern, KSU, and CSX as well were both out. Two more that saw sell the news, but the KSU seeing a nice little bounce back here, Scott, a little bit more immediate, and same with CSX coming in to some key resistance. We kind of talked about these charts and patterns here. You see anything different in these ones from the earlier ones that we talked about?
I think KSU definitely is a stronger one, as you mentioned. Bounced cleanly off the 200-day moving average a week ago, rising 50-day moving average, so it's holding up a lot better than some of its peers. I'd be a little concerned about CSX, given the fact that it is below the 50-day moving average. As I said earlier, UNP, same story there, below the 50. Norfolk Southern, NSC, is actually up there. I'd say it's second to KSU. So if you really like the group, I mean, just keep watching them and how they trade around their above or below their 50-day moving averages. But KSU looks pretty solid.
All right. Next up, we'll take a look at Steel Dynamics, STLD. This would have been out Thursday morning. A little bit of a sell the news reaction here. They had good guidance going into it, most of the steel plays, but I didn't see a lot of follow through after they talked about their results. I would note that the inventory levels were low at these names, so that should bode well moving forward. But um, seeing this came down into that 34 area. Now we're seeing a loose bounce up trying to fill that gap, but some pretty stiff resistance here.
Steel Dynamics, right?
Yes, STLD.
STLD. Yeah, I concur. I mean, the time to buy steel stocks, they were just ramping up throughout most of 2020, and they seem like they're just kind of going through a natural corrective phase at this time. So be a little cautious below the 50-day moving average for sure. But I like the fact that it bounced off that 34 support level as of late January. So it's a mixed bag right now because I saw U.S. Steel also came out, ticker X. I think they had earnings, and they had a weak response today, dropping back down to 16. Whereas something like Nucor and STLD, they gap to the upside. So I don't like when these names in the group start to diverge from one another based on earnings and stuff like that. But it is what it is. So if you're looking for the ETF, look at SLX. That's another way to play that group. Nice diversification. And I believe SLX also has a decent dividend, almost 2%.
Okay, next up, 3M. Which came out with some pretty good numbers, beaten by 21 cents. They beat on revs. They were upgraded later that morning by JP Morgan following these results. They got upgraded just earlier today by Argus. So the name, one of the better reactions we've seen to earnings, you can see it ripped above the 50-day moving average there. Got up to 185 before pulling back in. I like this area here for an entry, Scott. So I definitely would have this on the swing long. Now I know that you've when it falls off, you tend to like to short it. Is the same for the upside here for buying?
To be honest, Gav, I've never bought it. I've only
Yeah.
shorted this stock. I'm a big fan of shorting this name when it gaps down on earnings. And if you go back in history, this thing just trend lower for weeks on end after a poor earnings report. But look at the long term, say like a 5-6 year chart of this name on a weekly or monthly time frame. And that 180 area is the line in the sand for sure. Now, stock's been struggling since early 2018, so it's had a poor last 3 years or so, but it's just starting to break out with this move here recently above the 3-year downtrend line. It's confronting 2-year resistance around 180. I agree, Gav. It's tempting. I'll definitely keep it on the radar because if it starts to make a move higher above that January peak there, this could be a long-term, runner all the way back up over 200 and maybe back to all-time highs in due time.
3.36% dividend too, Scott.
Yeah, so you got a nice, dividend while you're sitting around waiting for it to recover. But overall, I'd say, I'd say long-term, as long as it stays above 160. I would like it if you want to get in a little earlier, but I would watch for strength back towards 200 to really be turning on the longer term charts.
Yeah. Next up, we got American Express AXP. At the time of its earnings, I kind of said I didn't really have a feel for the direction. I expected it to trade in a sideways direction, and it's definitely fallen into that pattern. A little whippy running from 128 to 114, but I didn't see enough evidence here to really break it out of the range one way or the other. So I think this is range bound.
Yeah, throw this in with all the other credit card companies. Very choppy, sloppy chart action. It looks okay above the November gap around 110. That's the short-term support level, 110.
All right. And we had DHI, DR Horton. Talked about the key for getting above the 80 level, and it was rallying above that post earnings, but came crashing back down below to drop down to that 74 area. We are seeing it trying to establish this, but I'm a little nervous given how strong the results are that it wasn't able to hold above 80.
Yeah, I'm not a big fan of like buying any individual home builder. I would always trade the ITB or the HB instead. And all the charts, they seem to all have very, very, very similar charts to begin with. But they look pretty good. I mean, they were one of the leading groups throughout 2020. They consolidated into the second half of 2020 from like Labor Day on, and then they just started to break out here last week or so after the earnings reports pulled back a little bit. They're holding on to those gains there. If you're gonna, I don't know how many. If you're gonna be bring up other home builders, Gab, but I would just say they all look the same based off the
Yeah.
ITB and the XHB.
Yeah. Okay. We had Freeport McMoran out that morning too. FCX had been
Are you
making.
still long this one?
No, no, I was
Oh.
not involved with it. I had, was recommending it at the 13 area here. I am not long it at the moment, so just
Mm-hmm.
wait for this chart to pull up here, Scott. Sorry
Yeah,
about that.
you were probably one of the few people that I came across over the last year or so, 2 years or so, that was pretty much constantly saying, "Hey, you need to pick this up in the teens." So
Yeah.
yeah, and that turned out to be a really good call for people that stuck with it. So you are breaking a multi-year downtrend line. I mean, this stock peaked way back in 2010, 2011, and it just this year off the COVID lows has begun to accelerate to the upside. It's stolen out around 30, which if you go back in a long-term chart is also a significant prior support acting as new resistance. So I think it's going to kind of stay in this trading range up here in the high 20s. So it's probably going to be more about buying weakness, selling into strength at this stage in context of that trend.
Yeah. Okay, and then we are going to. Scott, just taking a look at something real quick. Okay, we're going to press forward here into the 26th. Um, Actually, yeah, we'll cover one more day and then we'll come back around tomorrow, Scott. But
Okay.
GE was out that morning as well. It was a big day for earnings. Great results. Free cash flow numbers were fantastic. It's trading a little bit of a sideways direction, but this is after a pretty big run. This is another one that I've got in the long-term account from the sixth range. We're banging the table on it at that point. And right now, it just seems set to make another sideways consolidation move, which I'm perfectly content with. You could see it on the monthly there, pulling it up on the weekly. Just running into some resistance right around this 11-12 level.
Yeah, it's currently like sitting right along the rising 50-day moving average or in that $11 and $12 area. Uh, as always, I like stocks that get from single digits to double digits. So 10 is going to be your deciding line in the sand going forward if you're short-term oriented. Bigger picture oriented, you have your 200-day moving average curling back up, which is just underneath 8. So if you have a little bit more patience and if there's a bad earnings report or stock corrects or whatever, keep the $8 200-day moving average on the radar because it does look like this stock could be turning a corner on the longer term charts. It's suffered for years. It definitely, underperformed significantly. It looks like it may have capitulated to the downside and washed out, everybody that had to be out. And it's one of those long-term lottery tickets that maybe just stack away and never look at it.
Yeah. We also had Johnson and Johnson that morning. Uh, more about the vaccine numbers, I think, than anything else. The figures were
Mm.
fine, but we have seen this one dip back down below its 20-day moving average. Some support moving up here in the high to 155 to 160 area.
Yeah, recently all-time new highs. Can't complain with that. Slight pullback. The island gap, where they left those few days hanging out there above 170, above 165, does raise a little bit of a concern when you see those, because that could put the brakes on any sort of momentum and rally. But if it pulls back in, you got huge support right at the 50-day moving average and prior highs in that 155 area. So I would just keep that as the short-term line in the sand for Johnson & Johnson.
All right, Lockheed Martin. We were talking about these names are really looking weak, but like I
Mhm.
said, just seems like they're seeing a little bit of a change in pattern here, Scott. So LMT, any thoughts? I mean, it's still a downward trend line in place, but it's going to be one to watch, I think.
I picked this one up as a long just 2 days ago, Gav, around 322 area. We captured about 10 points to the upside for a counter trend trade. as I said on audio, that chart looks awful. I mean, you look at the downtrend that's been in play here for the last month or so. Why did I pick it up? Because it showed up as an oversold candidate on the TA page scans. The RSI was in oversold territory. It traded down significantly over the course of the last couple of days, below the Bollinger Bands, et cetera, et cetera. It set up perfectly on Monday when it reversed off the 320 area to take a stab for a counter trend bounce. We held it overnight and we captured 10 points on it. So, that's it. Otherwise, short term, everything still points to the downside in this stock. It really needs to prove itself to get higher. So, just take it easy on this one.
Yeah, yeah. Okay, next up, RTX, going to be pretty similar here. Raytheon Technologies, of course. Um, this chart looks a little bit better, I would say, though. Of the group, if you're going
Mm.
after one, it could be Raytheon.
Which the aerospace defense group?
Yeah,
Yeah, it's not bad. I think they're not. They're kind of industrial because it's kind of Raytheon was more of the aerospace, right? United
the
was more of
United.
the.
Yeah, but then
So
they also rolled out their Carrier and
that's
Otis.
true. That's true.
So
So yeah, I mean, I agree, Gav. It does look like it's more sideways than downtrend. So I'll give you that. 65 looks like the key support level off that gap from that November, that bullish gap there. So it could be the leader in the group if it starts to get moving to the upside through the
yeah,
70s. Yeah, I like it.
yeah. It's an easy beauty contest to win, Scott.
Yeah.
So
Yeah,
um,
I do own it in my long-term account. I mean, I've owned it for a while. And
yeah,
then we got the shares off of Carr and Otis as well. So
right.
spin-offs and stuff. So it's just kind of a buy and hold for me.
Yeah. Verizon. I still own Verizon, and from 45, been collecting the dividend on this. This is basically like my bond portion of the portfolio, if you will.
Yeah,
But the
yeah.
chart looks ugly here. But it is showing a little bit of support down around 54, and I think that sets up as a key area for the 54 area. You can see it here on the weekly exactly. That's the weekly 200 moving average there. So
hmm
big level for Verizon. If you're looking to get involved in it, this would be the area where I'd be looking at.
That's pretty much took the words right out of my mouth from what I said earlier this morning, Gav. It's amongst the communication stocks, it looks pretty darn good down here. If you're not involved in it or you want to add to a position, anywhere around 54, 53. I wouldn't suspect it's just going to turn on a dime here and be back above 60 anytime soon. But if you're looking to start a position, scale into it, collect a nice dividend in a stock that's been beaten down the last 2 months, this area below 55 looks pretty solid.
All right, and the last name that we'll cover on this round, Rockwell Automation, ROK. Just seeing a little bit of a rollover in reaction to the news, but I'm not overly concerned. This is the biggest American holding in that Robo ETF that I own, and just robotics is the future. So just seeing this trending along 240 in for a little bit of a consolidation after a pretty long run. But you can see it here on the monthly. It's just at that next level. So I'm perfectly fine with Rockwell here. You could probably be a little patient because I don't think I'll run away from you if you still wanted to get involved with it. But any thoughts on Rockwell, Scott?
Yeah, I mean, it's lagging a little bit there from that gap down. That took it in late January. They took it below the 50-day moving average. You do have that support around 240, 235 area. That is definitely a line in the sand over the short to intermediate term that must hold. If it starts breaking down below 230s, I mean, you could be looking at a move all the way back to 200. But if it gets back there, you look at a long-term 3-year, 4-year chart of ROK. 200 would be a solid, key level to get involved with it again. So short-term, a little precarious, needs to stay above 230, 240 zone. If it cannot, I'd be nervous.
Okay, so that's going to do it for us on this portion. We'll continue to run this segment for the next few days. I know tomorrow we got the sentiment and flow show, so we might skip over to Friday, but we are up to the 26th, so we're nearly caught up with where we're at with some of the bigger movers. So if anybody's got any questions on this, definitely let us know. We'd be happy to answer questions. And we'll continue to be keeping an eye out on the markets here, Scott. And I guess jumping back on around 3:30 Eastern time for a look at some of the after hours earnings.
Right, I might jump on a little sooner to go through some movers and stuff like that, or some trades updates. But yeah, I'll talk to you soon.
All right, sounds good.